What if the biggest move in XRP's history wasn't a market surge, but a date quietly hidden inside an SEC filing? Because right now there's a countdown ticking and hardly anyone's talking about it. Earlier this week, Canary Funds updated its registration document with the U.S. Securities and Exchange Commission, the so-called S-1 form for a proposed XRP exchange-traded fund. On the surface, it looks routine, but buried inside that update is something extraordinary. Canary removed what's called a delaying amendment. That small legal adjustment has massive implications. It means the filing now automatically goes into effect after 20 days, no more indefinite waiting, no more quiet delays. The clock is officially running, and every passing day brings XRP closer to a moment that could rewrite its position in global finance. If Nasdaq signs off on the companion Form 8A that allows shares to trade, this XRP ETF could go live, not someday but potentially within weeks. Analysts are already calling it the XRP countdown. For years, XRP holders have waited for institutional legitimacy, for Wall Street doors to open. Now that doorway might have just unlocked, and the markets are watching to see if the SEC steps in or finally steps aside. Because if this date holds, the crypto world could be standing on the edge of XRP's most pivotal 20 days yet. To understand why this 20-day countdown feels seismic, you have to rewind to the legal storm that nearly buried XRP. For more than 3 years, Ripple Labs fought tooth and nail against the SEC's accusation that XRP was an unregistered security, a case that froze progress, scared off exchanges, and cast a shadow over one of crypto's most ambitious projects. Then in 2023 came the turning point. A federal judge ruled that XRP itself was not a security when traded on public exchanges. Overnight, the token's reputation shifted from regulatory exile to conditional redemption. It wasn't a total victory, but it was enough to open doors that had long been sealed shut. That ruling didn't just free XRP from the courtroom, it quietly re-anchored it into the financial mainstream. Banks, payment firms, and institutional investors could now explore XRP without the fear of stepping into legal quicksand. And now, almost poetically, that same legal clarity is setting the stage for XRP's next transformation into a Wall Street-listed ETF. The same SEC that once tried to bury it may soon be the agency that authorizes its public listing. This is why the filing matters more than price action or charts. It signals a shift in perception, from courtroom controversy to corporate credibility. XRP isn't fighting for survival anymore, it's preparing for validation. But this newfound legitimacy is only half the story, because what happens next could tie XRP directly to some of the biggest names in global finance. So what actually happens when a crypto ETF moves from paperwork to reality? Most investors only see the headlines, XRP ETF approved, but the real story lies in the machinery beneath the surface. Here's how it works. When a company like Canary Funds files an S-1 registration with the SEC, it's basically saying we're ready to launch a product that tracks XRP, and we're inviting traditional investors to buy in. That form is the foundation, the legal blueprint. Normally, these filings include a delaying amendment. Think of it as a pause button. It keeps the SEC review open indefinitely until regulators give an explicit green light. But Canary just removed that amendment. And in the world of securities law, that's not a minor edit. It's a trigger. By removing it, Canary starts a countdown of exactly 20 days, after which the ETF automatically becomes effective unless the SEC intervenes. Now, once the SEC clock runs out, the final key step is the Nasdaq's Form 8A approval. That document is what actually gives the fund's shares the legal right to trade on the exchange. In simple terms, the S1 creates the ETF, the 8A makes it real. If Nasdaq signs off, trading could start almost immediately after the effective date. That means XRP could debut on Wall Street as early as late November or early December, assuming there are no new SEC comments or delays. It's not just a possibility anymore, it's a procedural countdown. Every day the SEC stays silent is a day closer to XRP becoming the next mainstream crypto investment vehicle, right alongside Bitcoin and Ethereum ETFs. And here's the twist, Canary isn't alone. Other financial giants are watching this countdown too, and some are preparing to join the race. Canary may have started the countdown, but it's not the only player in this game. Behind the scenes, some of Wall Street's most powerful names are quietly preparing their own moves, and they all have their eyes on one thing, XRP exposure. Just days after Canary's update, whispers spread across the investment community. Franklin Templeton, a century-old asset management giant, has been exploring its own XRP-focused ETF. Franklin already dipped its toes into digital assets through Bitcoin and Ethereum products, and sources suggest its crypto division sees XRP as the next logical frontier. Then there's Bitwise, the same firm that delivered one of the most successful Solana ETF launches earlier this year. Bitwise's debut shocked analysts, with inflows far exceeding expectations. That single event reshaped how investors viewed altcoin ETFs, proving that demand extends well beyond Bitcoin and Ethereum. Now that wave of success has created a new race, and XRP is at the center of it. Analyst Nate Garachi, president of ETF Store, even stated that XRP ETFs could outperform early projections, citing XRP's unique blend of liquidity, global partnerships, and use case credibility. But while Franklin and Bitwise bring decades of institutional weight, Canary's early filing gives it first-mover advantage, a strategic head start in a market where timing could mean billions in inflows. Still, this competition isn't just about who launches first. It's about who controls the narrative around institutional-grade XRP access. Each of these firms understands that once the first ETF goes live, it will set the tone for how global investors perceive XRP as a speculative token or a legitimate bridge currency for the future of finance. And as these corporate giants prepare to clash over XRP's mainstream gateway, another question looms even larger. What happens to XRP once this institutional door truly opens? On the surface, an XRP ETF sounds like a simple win: more access, more investors, more liquidity. But beneath that polished headline lies a far more complex reality, one that could permanently change who really controls XRP. Right now, XRP's price moves mostly with retail sentiment, everyday traders, speculative buyers, and crypto exchanges. But once a spot XRP ETF hits the market, that power begins to shift. Institutions, hedge funds, retirement accounts, and asset managers will finally have a regulated doorway into XRP without ever touching a crypto wallet. That shift is massive. It means traditional finance will begin to absorb XRP liquidity, wrapping it into ETFs, indexes, and derivatives, effectively turning a once rebellious digital asset into a tradable instrument of Wall Street. Some call this mainstream adoption. Others see it as the moment when XRP stops being a decentralized revolution and becomes a financial utility, one controlled by the same systems it once tried to disrupt. Every ETF share represents underlying XRP tokens that must be purchased and held in custody, locking supply and tightening circulation. This could create powerful upward pressure on price, but it also gives institutional custodians immense influence over XRP's availability and flow. And here's where it gets even more intriguing. If XRP truly becomes the bridge asset for cross-border settlements, the liquidity layer for CBDCs and ISO 222 banking networks, then whoever controls the majority of ETF liquidity could indirectly shape global transaction rails. It's a paradox. The more legitimate XRP becomes, the less control individual holders might have over its destiny. The token that once symbolized freedom from banks could soon be the very asset that banks rely on to move money worldwide. But even as this transformation unfolds, there's still one unpredictable player that could alter the course of this entire story: the SEC itself. And here's where everything could still change. The wild card in this high-stakes equation, the SEC itself. Despite the countdown, despite the filings, despite the anticipation, one move from the U.S. Securities and Exchange Commission can still hit pause. That's because even after an S1 becomes effective by default, the SEC retains the power to insert new comments, request clarifications, or reopen review if it believes further consideration is warranted. In other words, the clock may be running, but the referee can still blow the whistle. History proves this isn't far-fetched. We've seen it before. During the long wait for Bitcoin and Ethereum spot ETFs, the SEC repeatedly pushed deadlines, citing concerns about market manipulation, custody risks, and investor protection. Each delay sent waves through the market, moments of hope, followed by weeks of silence. This time, though, the optics are different. After losing significant ground in its case against Ripple and approving multiple crypto ETFs in 2024, the SEC is facing growing pressure from institutional players and even political circles to stop fighting innovation and start defining it. So now the agency stands at a crossroads. Either it steps in and prolongs XRP's journey once more, or it allows the countdown to finish, signaling that the era of selective regulation is finally ending. Every day that passes without intervention feels heavier. Analysts on X are already tracking the timeline like a digital doomsday clock, speculating on the exact hour the SEC's window closes. If the commission stays silent past that threshold, the ETF becomes effective automatically, and XRP enters a new chapter, not as a defendant in a courtroom, but as an asset trading on Nasdaq. That silence, that one non-decision, could be the loudest statement the SEC has ever made about XRP. But before that clock hits zero, another layer of speculation is building, because if the SEC doesn't move, the market certainly will. 20 days, that's all it takes. In the world of finance, 20 days can feel like a heartbeat. But for XRP holders, it could be the most important countdown since Ripple's legal victory. As the clock ticks, traders, institutions, and analysts are all asking the same question: what happens if the SEC stays silent? Because under the current rules, Canary's XRP ETF automatically becomes effective once that window closes. No announcement, no press release, just a quiet regulatory flip that suddenly turns XRP into a Wall Street traded asset. Behind the scenes, market chatter has already intensified. Whale wallets, those deep-pocketed investors known for early strategic moves, have begun accumulating XRP again, mirroring the same on-chain patterns seen right before previous major price rallies. Social analytics show a steady rise in mentions of XRP ETF across financial forums, suggesting the community knows something is brewing. Speculative models circulating among traders predict that even a modest ETF inflow could trigger billions in liquidity demand within weeks of launch. That's because ETF providers are required to hold real XRP tokens to back the shares they issue. Every investor who buys in adds to the demand pool, not through hype, but through mechanical necessity. And if history is any guide, the anticipation alone can be just as powerful as the event itself. The Bitcoin Spot ETF saw massive price movement before its launch, fueled purely by speculation and inflows preparing to deploy. Many believe XRP is now entering a similar phase, one where timing, not narrative, drives the charts. But the mystery goes deeper. Some reports suggest that institutional desks have already begun internal simulations for XRP ETF exposure, preparing for potential allocations the moment trading goes live. If that's true, then retail investors are once again behind the curve, unaware that the quietest days before the launch might be the most critical. This isn't just about another altcoin ETF. It's about a test of market psychology. What happens when a token long considered an outsider suddenly receives the same legitimacy as Bitcoin? The countdown isn't just procedural anymore. It's psychological, emotional, and financial. And if the SEC clock runs out without interference, the 20th day might not just mark an approval, it could mark a shift in power. Right now, everything feels eerily quiet, too quiet for what's potentially about to unfold. The filings are in motion, the countdown is ticking, and yet the market seems frozen in anticipation. It's that silence before a storm, the kind that traders remember for years. If the clock runs out and the ETF activates, XRP will no longer just be a cryptocurrency. It will be a regulated asset class, tradable from the same terminals where institutions buy Apple or Tesla. That shift would be monumental. It would finally bridge the divide between crypto and traditional finance, between retail believers and the global banking elite. But even more powerful than the approval itself is what it symbolizes. After a decade of battles, bans, and lawsuits, XRP could become the first true bridge asset, one that links digital liquidity with the real financial system. For the first time, banks, hedge funds, and asset managers might hold XRP not as speculation but as infrastructure, a tool for moving value across borders faster than ever before. And yet, that's exactly what makes this moment so fragile, because every transformation in finance comes with a trade-off. More legitimacy means more oversight, more liquidity means more control. And for the XRP community, this could be the defining test. Can a coin born from rebellion survive its own success? In the coming days, headlines will appear, analysts will debate, charts will flicker. But for those who followed XRP since the beginning, this 20-day window is something deeper. It's the moment where years of struggle, hope, and controversy finally converge. So whether the SEC acts or stays silent, whether the ETF launches or stalls again, one truth remains: the world is watching XRP in a way it hasn't in years. Because if this filing holds and that date arrives without interruption, the calm you're feeling right now won't last. It's not the end of XRP's story. It's the quiet start of something that could reshape how the world moves money.